Welcome everyone to the session, exposing my bow's financial frauds. Well, today, we'll be discussing the world's largest Ponzi scheme by Bernie Madoff. Madoff once operated a renowned investment fund. He was even regarded as one of the founders of Wall Street. By early December 2008, the world was shocked as Bernie Madoff confessed to masterminding a scheme, defrauding over $65 billion over the span of decades. Remarkably, Madoff's business partner were all seasoned, experienced investors from Wall Street. In other words, Madoff was never offered to teach fish to swim for the past 20 years. So, how did he do it? He established an investment firm bearing his name in 1960. At first, Bernie Madoff's business was completely legitimate. However, around the 1980s, realizing that the stock market couldn't yield quick wealth, Madoff came up with an idea. By leveraging people's trust, Madoff attracted numerous investors to his fund with a promise of an 11% annual return, a figure that was unheard of in the United States. To justify these profits, Madoff claimed to have found a secret in utilizing the derivatives market to safeguard investments from fluctuations. Numerous corporations, prestigious investment funds, pension funds, and tycoons consistently poured money into Madoff's company. Although there were some doubts at that time, they couldn't know that all of Madoff's strategies were deceitful. In reality, he wasn't investing in the stock market at all. For decades, Madoff relied solely on persuasion, manipulation, and deceit at its peak to gather more funds. He used new investors' money to pay returns to earlier ones, while convincing current investors not to withdraw. He even instructed employees to fabricate transaction confirmations and profit figures to send back to clients to create a sense of trust. This is called a Ponzi scheme. The common characteristic of this model is that investors are generally unclear about the exact destination of their money. What blinds them here is the enticingly large profits promised by the mastermind, far exceeding the usual interest rates pledged to them previously. However, not everyone fell for Madoff's persuasion. For instance, Mr. Marco Polo's noticed that Madoff's returns remained stable. Assets steadily increased each year despite market fluctuations. According to Marco Polo's, this is only seen in geometry, not existing in the stock market. Marco Polo spent over a decade investigating. The next unusual thing was that with such substantial assets, there was no trace of Madoff's transactions in the market. According to Mr. Marco Polo's, the U.S. Securities and Exchange Commission could easily uncover this scam if they were willing to do the math. However, the SEC has never taken strong action against Madoff. Until 2008, when the global financial market plunged into a severe crisis, the stock market plummeted, causing many investors to want to withdraw their capital. Of course, Madoff couldn't repay the debts. Thus, the entire Ponzi scheme collapsed, leading to Bernie Madoff's immediate arrest. In early 2009, this mastermind officially confessed to his crimes and received a sentence of 150 years in prison. Bernie Madoff passed away in prison at the age of 82. There are many other financial scams out there. See you in our upcoming videos on the Financial Fellows channel. Don't forget to subscribe to be the first to receive notifications about our new videos.
This is